Sorry about the game last night, Jill.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich, Director of Research of Digital Assets at Forbes Crypto, to discuss bankruptcies in the crypto space and what it means for assets and miners. Steve, it's great to see you as always. Welcome back to Trade Talks.
Yeah, thanks, Jill.
Yeah, and we've had some pretty significant news. Alex Mashinsky from Celsius resigns and FTX wins the auction for Voyager's crypto assets. What are your thoughts around that?
Right. It's kind of a crypto hunger games, for lack of a better word, because as we're just talking about before, the FTX US CEO, Brett Harrison, just resigned as well, I think within an hour or so ago. And it really is a bit of a changing of the guard when it comes to C-suite executives in a number of major crypto companies. Aside from those two, Michael Saylor, the former CEO and founder of MicroStrategy, relinquished his CEO position to become chairman of the board. Jesse Powell, the founder of Kraken, the second largest crypto exchange in the U.S. by trading volume, is stepping down after 11 years at the helm to become chairman of the board. Sam Trabucco, who was co-leading Alameda Trading, the quantitative trading and investment firm founded by Sam Bankman-Fried, announced that he's leaving. Genesis Trading, Michael Murrow, the CEO there, that had a $2 billion plus balance sheet hole to now defunct Three Arrows Capital, also left. So, I mean, it's an entire shift change, line change, to kind of use like a hockey analogy. And I think it just really speaks to the tough times that we're in. When crypto prices were going up, everybody was feeling good. A rising tide lifts all boats, and it's very easy for people to get confused with essentially correlation or causation, being right because they're lucky or being right because they're good. And now we're starting to see how some people over leveraged their balance sheets, gambled with people's money, did not take risk management seriously, and as we're seeing exchanges and companies across the board look to cut costs, it's very important to have executive leadership, the right executive leadership, to go through a bear market. So I expect we're going to be seeing more of these.
Yeah, it's a bit surprising in terms of what happened with being over levered and what we saw with risk management, because many of the people that you just mentioned are seasoned professionals within this space. Many of them have come from traditional finance backgrounds, and regardless of what asset class you're trading in, Stephen, as you know, risk management in the balance sheet has to be priority number one. And we're also seeing it in the Bitcoin mining space as well. Hosting firm Compute North filed for bankruptcy last week. What do you think that means for Bitcoin mining in general, especially for ex-Ethereum miners?
Right. So I'm glad you brought this up, because Bitcoin mining is one of those topics that's not necessarily sexy, but it's very important and involves significant dollar amounts. I mean, this company that just filed for bankruptcy in February, they launched they raised $385 million, $85 in an equity raise, and a $300 million loan from a lender, and now they are declaring bankruptcy because essentially it seems they got backed into paying very high energy costs, and they essentially the service level agreements that they have with their clients, including Marathon Mining, the largest publicly traded Bitcoin mining firm out there, essentially they can't service those agreements profitably. So now they're filing Chapter 11, which means that they're going to continue operating, and as far as I can tell, they're going to try to make sure that they uphold all of their commitments for now, but it remains to be seen exactly how this is going to work. And I think it speaks to a bigger ill within the Bitcoin mining community. And this is something that hasn't gotten a lot of attention. Right now, times are about as bad as they have ever been for Bitcoin miners. I mean, if you think about it, Bitcoin price is down. I think it's down about 60% year to date, much higher if you go back to the November 2021 high of about almost $70,000. The Bitcoin hash rate is about as high as it has ever been, because all these mining companies that got involved during the gold rush last summer, when there was a big exodus out of China, now all those machines want to come online, and that leads to hash rate going up. They have no choice in many cases to put those machines online, because they're a depreciating asset as new ones come out. And therefore, I mean, there's some fancy calculations that certain companies do to really figure out the profitability of mining for a particular like kilowatt hour of electricity. And right now mining profitability is about as low as it has ever been. So Compute North is bankrupt. One company that people are looking to right now is Core Scientific. They are a massive firm, bigger than Compute North. They have a mix of their own proprietary mining as well as some hosting services. Hosting means that essentially you provide the infrastructure and the housing, and people give you their miners to plug in and operate for them. Really, we're going to look to see what miners. There's probably going to be a period of consolidation, M&A, and it's going to be hard to see which miners are going to be able to sort of ride out this winter. Margins are still good for the best ones. They can still mine Bitcoin profitably, but it looks like that big gold rush that we saw last summer might have been too much for some companies to handle.
Yeah, well, you know what the telltale sign always is, you see conference activity. It was pretty robust in 2022. I'm curious to see what it'll be like in 2023. But you know, Stephen, this happens in a number of industries. It's not specific to crypto. You kind of have the boom, and then you have the fallout, and then you move on to newer technologies and newer types of platforms. So it's not the first time that the space has been through here, but I want to talk about crypto lender Next, right? Got hit with lawsuits from, I think it was 8-10 states, stemming from its interest bearing crypto accounts. Is this a repeat of Celsius and BlockFi all over again?
Yeah. So when I saw this news, it kind of brought me back to last summer. I mean, we broke the story at Forbes about how the New Jersey Attorney General's office was suing BlockFi, claiming that their interest-bearing accounts, the BlockFi interest account, and I believe at the time they had about $15 billion in assets under management, were essentially an unregistered security, and they were offering them as a sort of bank account substitute without necessarily disclosing all the adequate risks to the consumer. Essentially, that's what was alleged. Obviously, that involved Celsius. That also grew to involve Voyager as well. I mean, Voyager was also accused of falsely claiming to have FDIC insurance, which turns out not to be the case. And Nexo, in some of the reporting that came out when those 8 states essentially sued the company, said that they stopped bringing on new customers in the U.S. and they stopped essentially adding to balances for existing customers, but they still offer these programs. And now that we've seen what's happened with some of those companies that we mentioned before, obviously regulators are concerned. The real interesting part, or the real interesting juxtaposition when it comes to Nexo, though, is that it came out today that they purchased some equity in an OCC regulated bank, which actually means that the company now is able to open up a bank account for itself with the company, should help it expand in the United States and perhaps complement some of the products that it offers. That said, I do not believe, and I'm not a lawyer, but I do not believe that necessarily means that they can skirt this issue from the securities regulators related to the interest account, because I believe those are 2 separate issues.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Joe.